Hello and welcome to another one of my videos. So I thought I'd give it a go with me in front of the screen. I don't really have a problem showing my face. People know me anyway. They know what I do. In today's video, I want to talk about where I think the market is going and what I think is happening. It doesn't mean I'm right. I am placing my bets accordingly. I have bought a lot of stock today. Potentially by the end of the day, it'll be about £20,000 in stock that I've committed to, which is great. Like it's been bought at good prices. I can't just throw money around because I have money now. It needs to be done prudently and it needs to be done in a way that puts the business forward and also pays what I owe. That's not a problem. But I just really wanted to talk about where I think the market will go over the next maybe 6 to 18 months. For anyone who knows me, I'm a massive caffeine addict and also a running addict, believe it or not. I'm probably the heaviest 5K runner you've ever met. So yeah, the price has been dropping of late, and there's a lot of people on the market are saying, I think it's due a correction. I don't agree with this. It might be due a correction, but personally, I think it's consolidating. I am of the belief that the market is being fueled by excess capital, which is being pumped via QE. There's arguments that the QE doesn't make its way into the hands of the public. However, that's not true because I've just been given a considerable loan and it's found itself into the public. It will trickle out. I'm starting to see bubbles, or what I believe are bubbles. I was talking to another dealer and he said to me, modern coins, not touching them. And I said to him, same. I'm not going anywhere near them. I don't want it to be a case of holding the baby. I already play that game of holding the baby or hot potato with bullion anyway. It comes and it goes out because anything that drops, I've still got to shift it. I've got to lower my average. I've got to find the stock. It's effort. And that's okay for gold because it's VAT exempt. For silver, that's kind of an issue. When I'm capped at 85k, it's just not worth it. I've got to buy properly. And if I'm buying modern numismatics off the basis that I want it to moonshot and it doesn't, I'm taking it's a harsh beating really, because not only do I get a beating on the side of I'm not making any money, I'm losing money. I get a beating on the side of I've still got to pay some of my bills that I haven't paid, and I get a beating on the side that I lose it for the VAT exempt cap. So it's just not worth it for me to go down that line on something that could implode. I'm not saying it will implode. I'm just saying that I'm too long in the tooth to really go down that route. I've seen bubbles. I've seen them implode. I'm pretty sure there's going to be an implosion somewhere in the next few years, somewhere. I read a really interesting book when I was in Australia about how people try to solve problems and they create bigger problems. I've been saying for a very long time that we never solved 2008. We just made the problem bigger. We kicked the can down the road, and the pandemic is kind of the tip of the iceberg, but it doesn't solve the excess liquidity that's been in the market since 2008. And of course, the stock market's going to go up. If you look at the rally that the American, I think it's the Dow Jones. I know they've got a couple of indices. I think it went to 30,000. It was going crazy, absolutely crazy. But what you need to understand is when something uh, like when there's more liquidity, it's like there's more stretch. So it's not a case of there will be higher highs and lower lows, and it will become more volatile. So when something is 1,000 and it goes up 10%, it might lose 10%, but that's only 100 points. When it's 30,000 and it loses 10%, that's 3,000 points. And you may say, well, that's not really relevant, but it is, because there's a lot of people who buy into the market who are betting per point or trying to cover positions that are either hedging or spreading, etc. Now, where I think the market is going to go due to this excess liquidity, I actually think that the market is leveling off. And I actually think the market is leveling off, and I think it's building a platform for the next leg up. I'm super bullish on precious metals. In fact, I've just filled my ISA. So what happened was the last 4 months, I absolutely traded my ass off. Like it, it made me ill mentally, but it was a very lucrative time for me. I had a bit of luck at the sports book. I got a bit of help via grants from the government for being self-employed, and I made a fair chunk of change trading coins. It pretty much covered me for my whole ISA allowance. So with the influx of the new money that came from the loan, I've put that money into the shares. As a gold dealer, I get to the point where there is too much on my books. I get to the point where it's more of a risk holding something than it's not. If you're an individual and you believe that gold's going to go to the moon or whatever over 20, 30 years, that's fine. I'm not working under the same parameters. It becomes an issue for theft. It becomes an issue in case I've bought too high. It happens. Like we've just had a mini smackdown. I've probably got a few items that I'm probably very lean on the margin. It's okay. However, if I was to take that money that I put into my ISA and put it into coin at once and it goes the other way, I'm in trouble. That's not just a haircut, that's a kicking. That's not me losing like a few £100. It's happened before. That's part and parcel of trading. It happens. That's me losing a few grand, which is a month or two of bills. I I know people think that bullion dealers are super wealthy. It's not the case. We have it in assets, but it's usually a balance book between profitability and paying down debt. Or in my case, that is the score. So I can always call upon reserves, but when you take a kicking like that, it's difficult because you've got to re-maneuver and get yourself in a position. So it didn't make sense for me to buy the physical for the reasons I've stated. However, I fundamentally believe that gold is going higher. So what's the next plan of action? I could have taken some options out. I don't really know enough about options. I've spread bet before, but I don't know enough about options. I probably should learn more into it if I do take this further. But for me, the logic was buy the mid-tier miners. That's where the growth is going to be. Now, I don't doubt for a second that my miners might lose 30%, in the short run. It's okay. Like I can't time a market precisely as I need to. Trading coins and trading shares are completely different. I know that if I can get in at spot or get in a couple of percentage points under spot, I can move it. There's always going to be a buyer. However, if I buy stock, I'm losing out on the spread, and I don't know if sentiment will drive it down or if it will drive it up. I'm not worried. At the end of the day, I'm taking a risk that I feel is fundamental to my core beliefs. I believe that gold will rise. I actually think the stock market will tank. I think there's going to be another really bad wave. Well, there is another really bad wave at the moment of this virus. I think there'll potentially be a third one. I think next year is probably going to be a bit of a write-off as well. It's not going to be a fun couple of years for us. And my plan is, or my theory is that the gold miners will be cash cows, absolute cash cows. Those who are sitting on reserves and those who are producing, I reckon they're going to do very well over the next 18 months or so. And the plan is to ride it and then flip it because the stock market will take a kicking. It has to. I don't see any other way it can keep going up. I reckon it will implode. You're going to have lots of people who lose their jobs. It's already happening. You hear it every day. Thousands of people lost their jobs. I've had people come up to me and say I've lost my job. I've had people come up to me and say I've taken a haircut in terms of my wages. There's going to come a point where the middle class and the lower class, for those of you who are outside of the UK, we kind of have a class-based system. They say it's not relevant. It perfectly is. I can walk down the road and I can see the different classes. It's kind of sickening, really. Within the space of a mile, you can have people who live a life of absolute luxury, and you can have people who are, well, they're just not getting by. The amount of homeless people where I live is shocking. and something needs to be done to get these people the help they need, it won't happen. It just won't happen. But to touch upon what I was saying, I think there's going to be a K-shaped recovery. I think in the short to medium term, the stock market will take a kick in, but then I think most of the assets will start rising. I think the people who've got the liquidity to buy, I think they're going to do very well, and I think everyone else is going to kind of really struggle. What do you do? Those who invested in gold. I'm not so sure about silver. I think silver's one of those. It always has its day. I buy silver, I sell silver, I keep silver in reserve. But I must admit, I said to a friend of mine, I'm not really interested in keeping more than 500 ounces. It's just, for me, it's not worth the effort. I'm not saying it's a bad investment. You need to realize that when I have 500 ounces, it's not 500 Brits, it will be 500 probably different coins, and it's sure some coins I can do very well. There's some coins I'm sitting on, I can make 100% on them, but then I've got to sell them. I've got to find the right buyer, and then if the right buyer isn't there, 100% soon becomes 80, and then 60, and then 40, and then you have to account for the time I put in to do it as well. So yeah, they're my views. I think gold will go up. I don't think it's going to drop further. No, it might drop further, but I don't think it's done. I think we're starting the next leg up, and it's consolidating. I think the miners will do well. I think the stock market will do badly, and I think there's going to be a time where you can flip from the miners to the stock market and do very well. I've got on paper that the miners I have, so I've put 20,000 in. I reckon I could take 50,000 out with a bit of luck. I'm not saying it will happen. I'm not saying by any stretch that I'm right. And if I'm wrong, I might lose 10 grand. But the chance for 150% upswing and 300% or 3-to-1 bet, I'll take those odds. I'll take those odds on something that I deal in most days, and I fundamentally believe that gold and silver will protect your wealth in this coming shitstorm. So yeah, it's been a bit longer than I planned. I hope you've enjoyed the video. There's been a lot of people asking me about my views and my thoughts on it, and I thought I'd just share them. It doesn't mean you can use it as a stick to beat me with. My views do occasionally change when the facts change. I just don't see how they can stop printing money. Just don't see it. And if that's the case, then it means they will have to keep interest rates low. And if they keep interest rates low, it means gold will shine. So anyway, take care, guys. Bye.